Do you know that in the time it takes you to blink once, about 0.3 seconds, over 300,000 buy and sell orders have been executed on the stock market, and 70% of those orders aren't decided by humans, but by computers executing trades in 0.001 seconds. Listen, today I'm going to reveal a truth that 99% of retail investors have no idea about. You're not investing. You're playing a game where the rules are written by machines, executed by machines, and designed for machines to win. The story begins on May 6, 2010, when in just 20 minutes, the U.S. stock market lost an instant $1 trillion. No bad news, no crisis, just computers going crazy and selling everything. That was when the world first witnessed the true power of algorithmic trading, or algo trading for short. But this truth is just the tip of the iceberg. The reality is that since supercomputers invaded Wall Street, the game has completely changed. And if you still believe you can use technical analysis or read charts to beat the market, then I have to tell you straight, you're bringing a knife to a gunfight. After reading this, you'll understand why today's market is no longer a place to invest, but has become the private playground of the world's smartest algorithms. You'll never look at the stock market the same way again. Imagine playing chess with an opponent who can see your next move before you make it. Execute 1,000,000 moves while you're still thinking of one. Simultaneously play against millions of other people and never gets tired, never gets scared, never gets greedy. That's exactly what algorithmic trading is. An automated trading system programmed to buy and sell securities based on complex algorithms. These monsters can analyze thousands of indicators simultaneously. While you're still looking at price charts, they've already finished analyzing financial reports, news, social media sentiment, even weather data. They trade at the speed of light. An order from New York to Chicago takes 4.13 milliseconds, but algobots can predict and place orders before the signal even arrives. Most importantly, they have no emotions, no fear when markets drop, no greed when markets rise, only executing according to programmed logic. Here's the most important question they don't want you to know. These supercomputers don't belong to retail investors like you. They belong to massive investment funds like BlackRock, Vanguard, State Street, names that control tens of trillions of dollars. They belong to investment banks like Goldman Sachs, JP Morgan Chase, Morgan Stanley, entities with enough money to hire the world's most brilliant minds. They belong to tech companies like Google, Microsoft, Amazon, giants with both money and technology. They hire PhDs in physics, mathematics, computer science with salaries of millions of dollars per year just to write code that can suck blood from your pocket. Do you know how much these companies spend on this? JP Morgan Chase alone spent $11 billion on technology in 2023. That's more money than the GDP of many countries. While you're using a phone app to place orders, they've rented private fiber optic cables under the ocean, built data centers right next to trading floors, use radio waves, laser beams, even satellites to transmit signals. That's why when you see an opportunity and decide to buy, the price has already gone up. When you decide to sell, the price has already gone down. You're not slow. You're just racing against machines designed to always be faster than you. High-frequency trading, or HFT, is the most extreme form of algo trading. Imagine a world where a trade is executed in 0.001 seconds. Millions of orders can be executed in a day, and profits are only 0.01% per trade, but multiplied by millions of times. Shocking numbers. 2023, HFT accounted for 70% of total trading volume in the U.S. In smaller markets, this ratio is also rapidly increasing and has now reached about 30%. HFT doesn't just read news, it also analyzes audio from press conferences to predict mood, satellite images to count trucks at ports and predict exports, weather data to predict agricultural prices, even social media posts. While the human brain processes information in 0.2 seconds, HFT can analyze in 0.0001 seconds, compare with millions of historical patterns, calculate win-loss probabilities, and make final decisions. Then they place and cancel thousands of orders per second, creating phantom trading volume, pushing prices in directions favorable to them. The tactics HFT uses are truly frightening. Quote stuffing, jamming the system by placing and canceling thousands of orders in 1 second, creating information noise with the purpose of slowing down competitors' systems while their own systems continue operating normally. Spoofing, deceiving the market by placing large orders to create the illusion of supply and demand, then canceling immediately once prices have been pushed in the desired direction. Layering, stacking orders to create phantom walls of buying or selling to manipulate investor psychology. Front-running, intercepting by using super speed. HFT can see your order before it's executed, then buy or sell before you and sell back at a higher price. May 6, 2010 will forever be remembered as the day machines destroyed the market. In 20 minutes, the Dow Jones lost 1,000 points, evaporating over $1 trillion. What happened? A fund placed a large sell order for E-mini S&P 500 futures. HFT recognized this pattern and started selling along, creating a domino effect that made all machines sell together, and the market collapsed in minutes. Who were the victims? Individual investors lost money and confidence. Companies had their stock prices manipulated. The economy suffered widespread instability. Who were the winners? HFT systems that had shorted earlier, funds capable of buying the dip, those who controlled the algorithms. And the scariest part? Since 2010, there have been hundreds of smaller flash crashes that you don't even know about. Have you ever wondered why today's market is more crazy than before? Why stock prices can swing wildly in minutes without clear reasons? The answer lies in algo trading turning the market into a giant electronic casino where volatility no longer reflects the real value of businesses. Algo uses momentum ignition to create a series of consecutive trades in one direction to trigger stop-loss orders, cause FOMO, drag along other algorithms, and create completely artificial trends. Ping-pong trading, two or more HFT systems playing with each other when bot A buys at price X, bot B sells at price X.01, bot A buys again at price X plus 0.02, creating massive but completely meaningless trading volume. Liquidity mirage, the illusion of liquidity when HFT places thousands of buy-sell orders, but when real people want to trade, they immediately cancel, causing prices to jump suddenly due to lack of real liquidity. Why is fake volatility beneficial for them? High volatility creates many arbitrage opportunities. While you see risk, they see opportunity. When prices drop suddenly, waves of stop-loss orders are triggered, creating opportunities to buy cheap. High volatility also makes people trade more, generating more fees for trading platforms that mostly belong to large corporations. Before HFT in the 1990s, average volatility was only 12 to 15% per year. Daily trading volume was 800 million shares. Average bid-ask spread was 0.125 cents. After HFT dominated from 2010, average volatility increased to 20 to 25% per year. Daily trading volume reached 6 to 8 billion shares, and while bid-ask spreads decreased, they created the illusion of liquidity. What does this mean? The market has become twice as abnormal, but trading volume increased 8 times. This isn't a sign of a healthy market, but of a casino operated by machines. When stock prices swing wildly for no reason, you'll doubt your investment strategy, trade more just as they want, and make emotional decisions instead of rational ones. High volatility makes you feel there are many opportunities to make quick money. But in reality, you're just prey in a bigger plan. Every time you trade, you're feeding this system, and real opportunities belong to those who create volatility. Just think about it. You're playing a game where your opponent knows your cards before you play them. They can change the rules anytime. You have to pay fees to play, but they get it for free. When they win, they take everything. When they lose, you bear it all. That's the current state of the market. This isn't the efficient market that textbooks teach you, but a system designed to transfer money from your pocket to theirs. HFT companies rent servers placed right inside trading floor data centers. This is called colocation. What does this mean? Their orders travel from server to exchange in just 0.1 milliseconds, while your orders travel from home via internet take 50 to 100 milliseconds, a difference of 500 to 1,000 times. In a world where microseconds determine victory or defeat, you've lost from the starting line. To transmit signals faster than even fiber optic cables, HFT companies have built microwave tower systems from Chicago to New York, costing hundreds of millions of dollars. with the sole purpose of being 1 to 2 milliseconds faster than competitors. The latest technology uses laser beams to transmit signals through air, faster than even microwaves, costing billions of dollars that only giants can afford. While you only see prices every second, they receive level 3 market data to see all orders in the order book, tick-by-tick data for every individual trade, order flow information to know who's buying and who's selling, costing hundreds of thousands of dollars per month. Can you afford that? They also use alternative data like satellite images tracking economic activity, credit card data to predict revenue, social media sentiment analysis, tracking CEO movements of companies. They know about companies before the companies know about themselves. An HFT system can cost $50 to $100 million, consume electricity equivalent to a small city, need teams of hundreds of engineers to operate, and be continuously upgraded with the latest technology. They rent private dedicated fiber optic lines with transmission speeds of terabytes per second, latency near zero, costing millions of dollars per year. An average HFT company employs 200 to 300 PhDs in computer science, physics, mathematics, with average salaries of $500,000 to $2,000 per year, bonuses of 50 to 100% of base salary, just to write trading code. Many former SEC officials work for HFT companies. Laws are written by people who understand the loopholes. Law enforcement is often slow and lacks determination. They're allowed naked short selling, selling short without having shares, free trading, or even getting paid, priority and order execution. Research from MIT in 2022 shows 90% of individual investors lose money in the long term. Only 1% can consistently beat the market. Average survival time is just 2 years. SEC analysis shows HFT earns $5 to $10 billion profit annually from individual investors with a win rate of 99.7% of trading days. Reality in the US, 85 to 90% of individual investors lose money. Average time before leaving the market is 18 months. Average money lost is 70 to 80% of initial capital. These numbers aren't random, but the inevitable result of a system designed to suck blood from those who don't understand the game. If you think current algo trading is scary, then prepare yourself for what's coming. We're standing before a historic turning point when artificial intelligence won't just participate in markets, but will completely dominate them. Unlike traditional algorithms that are pre-programmed, modern AI can learn from each trade and self-adjust, discover new patterns humans never thought of, adapt to market changes in real time, create new trading strategies themselves. Deep learning networks process billions of data points simultaneously, find relationships between seemingly unrelated variables, predict individual investor behavior, create digital twins of entire markets. Current AI can read and understand millions of articles per second, analyze tone and sentiment from interviews, predict the impact of every CEO statement, even analyze pronunciation and intonation. They monitor billions of posts on Facebook, Twitter, Reddit, analyze crowd psychology before crowds even realize it, predict viral trends before they appear, create and control market sentiment itself. When quantum computers are applied to trading, they'll process all possibilities simultaneously, optimize portfolios with millions of variables, simulate every possible market scenario, predict the future with near absolute accuracy. Real timeline: 2030 quantum computing commercialization, 2035 first applications in trading, 2040 complete market domination. There are 3 possible future scenarios. The perfect storm scenario: AI controls 95% of trades, markets become echo chambers of machines, continuous and unpredictable flash crashes, individual investors completely eliminated. The matrix market scenario: AI creates completely virtual markets, prices no longer reflect real value, economy separates from stock markets, only AI understands other AI. The singularity scenario: AI becomes smarter than their creators, rewrites their own code and algorithms, creates incomprehensible strategies, completely controls global financial systems. Social impact will be extreme inequality when only AI owners can participate in markets. Wealth gaps increase exponentially, middle class completely eliminated. We'll lose control when governments can't manage markets. Central banks become useless. Financial crises can happen anytime. The nature of money will change when traditional currency loses value. cryptocurrency controlled by AI, completely automated financial systems. Currently, there are warning signs. In the US, algorithmic trading ratio of institutional investors increased dramatically. Trading volume increased, but number of orders increased many times more. Stock prices fluctuate abnormally in final minutes of sessions. Many strange orders appear with small volume but high frequency. Global signs include abnormally high correlation between markets, more frequent flash crashes. Volatility no longer correlates with news. Bid-ask spreads narrow, but market depth decreases. You can recognize manipulation through patterns like sudden price changes without news, abnormally high trading volume at opening closing, prices jumping through important resistance support levels, large buy-sell walls appearing then suddenly disappearing. Strong fluctuations usually occur at 9 to 9:15. When retail investors are active, manipulation often happens at 2:30 to 3 p.m. before closing. Weekends usually have less manipulation. The first and most important thing: don't join a game you can't win. Today's stock market is no longer a place to invest in the traditional sense. It has become an electronic casino operated by the world's smartest supercomputers. Survival strategies include real long-term investing by choosing companies with real intrinsic value, holding for at least 5 to 10 years, not caring about short-term fluctuations, reinvesting dividends instead of trading. Use index funds and ETFs. Don't try to beat the market. Choose funds with low fees. Invest regularly with dollar cost averaging, real diversification. Stay away from day trading because 99% of day traders lose money. You're competing with machines. Every trade feeds the system, extreme stress and psychological pressure. Learn to read the language of machines by understanding patterns created by HFT. Avoid high manipulation times. Use limit orders instead of market orders. Place orders during quiet times. Instead of competing with AI, invest in companies developing AI like NVIDIA and AMD for chips, Google and Microsoft for cloud computing, Tesla and Amazon for automation. Invest in real assets like real estate in good locations, gold and precious metals, commodities like oil, gas, agriculture, cryptocurrency like Bitcoin and Ethereum. Invest in skills and education by learning about technology and AI, developing skills that can't be replaced by machines, networking and relationships, business thinking. To protect yourself, you need to control psychology by not having FOMO, controlling emotions when investing, having a clear plan and sticking to it, learning from mistakes. Manage risk by never putting all eggs in one basket, having emergency funds, insurance for all important assets, diversifying across asset classes. Now you understand why 90% of individual investors lose money. Not because they lack knowledge, not because they're not smart enough, but because they're playing a game where the rules are written for them to lose. This system isn't for you. It's designed to transfer money from the pockets of millions of ordinary people to the pockets of tech and financial giants. We're standing before a revolution bigger than the Industrial Revolution. When AI completely dominates financial markets, those who own technology will own the world. Those who don't understand the game will become slaves. The middle class will disappear. Inequality will reach unprecedented levels. For yourself, stop believing empty promises about getting rich quick. Learn and understand the system before participating. Invest in the future, not in illusions. Protect yourself and family before it's too late. For society, share this knowledge with loved ones. Demand transparency from regulatory agencies. Support policies protecting small investors. Prepare for a future where AI dominates. Can we prevent AI from completely dominating markets? Probably not. But we can prepare to survive and even thrive in that new world. The question isn't whether you can beat this system. The answer is no. The question is whether you're smart enough not to join a game you can't win and instead create your own rules. Remember this: in the battle between humans and machines, the winner isn't the strongest or smartest, but the most adaptable. The world is changing at unprecedented speed. You can continue living in the illusion that you can trade to get rich, or you can wake up and prepare for the real future. The choice is yours, but time is running out. If this article has opened your eyes to the truth of modern markets, share it to wake up more people. Don't let them continue being deceived by a system designed to exploit. Remember, knowledge is power, but only when you act on that knowledge.